Actually, investing into a company is good fun, right? It's a lot of excitement. There's a lot of activity. There's a lot of buzz. You love talking to the entrepreneur. You try figuring out how I can add direct value into the company. Especially people who have been in the industry totally love the idea of investing. But it's like a really, really tough thing, because after you have made a few investments, figuring out entry, figuring out exits, managing the portfolio, tracking them, keeping an eye on that is actually a nightmare. So while it all starts with a fairly exciting process, very quickly you realize that it becomes a little bit of a tough to manage kind of a process. Which is why almost about 3.5 years back, I decided that at least for my personal side of the portfolio, I'm not going to be making direct investments into the companies. There are a few exceptions that you always make, but I think beyond those exceptions, as a part of the capital enhancement, as a part of the long-term planning, as a part of building the portfolio, I have restricted myself more to the funds where GPs actually take the accountability to be able to build out the portfolio. They are responsible for raising capital, they are responsible for deploying capital, they are responsible for managing exits, and it's a defined term duration, right? So I have actually shifted completely from making direct investments as an individual into private startup companies to actually investing into funds.